Hi, good afternoon, everyone. Thanks for attending. We'll get started in just a few minutes and let some people come in. Thanks for joining us today. We'll give it another about 30 seconds and we'll start right at the top of the hour. Thanks for coming. All right, the clock has just struck the top of the hour, so I will get us started. Hi, everyone, and welcome to today's Limited and Extended Care Planning Center webinar. Today, we're joined by Jamie Sarno, National Sales Director for Ancillary Products at Aetna Senior Supplemental, who's going to discuss an alternative to long-term care coverage. Just so everybody knows, today's webinar is being recorded and it will be sent out to everyone in the coming days. If you do have a question, feel free to ask it using the Q&A feature, and we'll save some time with Jamie at the end of the presentation so we can get to all of those questions. We will also include in this email that has the recording in it a survey, and would really appreciate your feedback so we know what kind of topics and speakers you'd like to see in the future. Before we dive in, I did want to say that today's webinar is brought to you by the Limited and Extended Care Planning Center partner, Aetna. Jamie will be able to tell you a bit about more about what they do during his session, and he'll provide his contact information in case anybody needs it and wants to contact him directly. So you can watch past webinars on demand, read articles from subject matter experts, and learn about the latest in limited and extended care on the LECP Center website. So if you want to see those, visit lecp.naifa.org to learn more. So without further ado, I will turn the virtual floor over to Jamie so he can tell you a bit more about who he is and what you need to know about limited long-term care coverage. Jamie?
Thank you very much. I appreciate that intro. And good afternoon, everyone. It's great to be here, and I'm looking forward to this. It's not often we get to express and show what an alternative looks like to long-term care. And I appreciate all of you being here. So without further ado, just a little bit about my background. This isn't about me, of course, but hey, number one, I'm a proud NAIFA member. I've been in the senior Medicare market for 37 years now. I sold long-term care for 24 of those years, and I have sold short-term care insurance from the very beginning until present day. And I'm president of Access Medicare Advisors and National Sales Director for Aetna Senior Supplemental. So just a little bit about me. I've been out in the field. I've spoke with many people, helped a lot of people. And before we get started, I am a true believer in long-term care. There is no substitute for long-term care. It's a very necessary evil. But there has to be alternatives when long-term care isn't available. So that's what we're going to talk about today. And we'll get started. I'll just show you. So why short-term care? I'm going to define a little bit. Everyone knows this, but I'm going to define what long-term care means and short-term care means, the underwriting procedures for both, the placement rate for both, the policy, speed of issue and delivery, elimination period, facility care, and observation status. That's a near and dear one to me. So defining long-term care, my mind, the words long-term care automatically make me think, well, long-term care is long-term care insurance. But the words long-term care refer to a category of services that help people perform certain activities of daily living when they're unable to perform them themselves. So here's what I'm talking about. We all know the stat that says 70% of individuals 65 and over will need long-term care services and support sometime in their life. We've all used that statistic. But guess what? It's the services that they may need. Doesn't mean there'll be a long drawn out sickness or injury or rehab. It could be very short. It could be a week, a month, 3 months, 3 years. Who knows what it might be? So it's really important to understand that these services are needed for short durations and long durations. So long-term care insurance covers these ADLs in a nursing home, assisted living, residential homes, and the trigger is typically going to be when they cannot perform 2 of the 6 ADLs or they're cognitively impaired. Well, just so you know, short-term care insurance also covers the same ADLs in a nursing home, assisted living, and residential care, the same exact triggers that long-term care has. So I just want to make sure that it's out there that you know these two triggers are identical. So there's nothing else that has to be done to get the care, to put the insurance in force. It's 206 ADLs or cognitive impairment. So what's the difference then? There's got to be a difference in there, right? And the difference is its duration. That's really the only difference between the two. Yes, that's a big difference there, but a nursing home benefit period that pays 365 days or more is considered long-term care. Any benefit period less than 365 days is considered short-term care. So we're really talking about 5 days. If short-term care was 5 days more, it would have to follow all the same rules and regulations of a long-term care plan. The carrier would have to have reserves in the state. There's so much more regulation on long-term care than there is short-term care, which can create a lot of havoc there, and it's not much fun. But that's really the main difference. So when you look at them face to face, duration versus daily benefit. So although short-term care insurance is limited to the maximum of 360 days, it's important to note that there is no maximum on the daily benefit, the dollar amount that the carrier can offer. So that's big because it's all relative to how much they're getting per day. For example, a top carrier that I know well currently offers a 360-day plan with a daily benefit of $400. That gives the insured $144,000 in just 12 months. This benefit could potentially help extend a nursing facility or assisted living stay well over 360 days, because it's all relative to how much that nursing facility or assisted living facility is charging per day, right? If I have $400 a day and they're only charging $240, short-term care will pay the entire amount to the insured. It's not up to the daily amount. So when the insured is getting that benefit, that money, they can bank that and they can extend their stay. Also with short-term care, if you add an optional home care rider, that can extend it an additional 52 weeks in the home for recuperation and therapy. And the maximum on that is $62,400. So you can see right there, if I'm getting a year or 360 days of short-term care at $400 a day, 144,000 plus 62,000 of home care, I'm over $200,000 worth of benefit in just a limited duration short-term care plan. So I think it's a little eye-opening if you didn't realize that. There's a lot of benefit packed into a small amount of time, which is very beneficial to the insured. And both facility and home care benefits can be used consecutively, giving the insured a combined 2-year plan of care. So let's say, I've done this many times, you sit down with the family or husband and wife, and you talk about a plan of care. Okay, maybe you're not eligible for long-term care at this time because of health, finances, whatever it may be, but short-term care you can qualify for. So you're constructing a plan. Everyone wants to be at home, right? I would rather be home. You would rather be home to recuperate, where we have our loved ones, we have family, we have our neighbors, anyone that can help us. That's very important. So maybe you want to start your home care first. You go 52 weeks using home care. When your time is up, if you're still not better, you can transition into an assisted living facility or a nursing facility. And what's great, short-term care does not limit what nursing home or assisted living or what home health care agency you can choose. You can choose any that you like. And restoration of benefits are also included on the short-term care that can double the duration and the benefit amount of the insured. So having a restoration of benefit is the same on a short-term care plan. So a year of nursing facility, assisted living with a separate year of home care, those 2 years can turn into 4 years. Simple math, I know. But like I said, it's important to know this. So what I'm going to discuss is this: the differences in underwriting for long-term care versus short-term care. As we all know, and I said at the beginning, my first attempt, depending on their financial situation, is going to be long-term care. That's going to be typically the best choice for them. But as we all know, very difficult to qualify by health for long-term care because all these things you're seeing right here. So medical records typically have to be ordered. There is a prescription drug check in the background that they're going to have to get, phone interview, cognitive testing, the MIB, the Medical Information Bureau, paramedical exam, and medical exam. Not all of these are with every carrier, but a few out of there, sometimes all. But they do it for a reason. We all know what that is. They want the healthiest of the healthy, which as you hit 50 and above, you're going to have certain ailments, high blood pressure, maybe type 2 diabetes, the onset of different things coming. It's very hard to take care of your clients out there. A lot of times you may not want to bring up a long-term care plan unless you know that they're going to be eligible to get that plan, because it's really bad when you submit an application, you've told them all the reasons they need it, and then they get a decline letter. They kind of lose faith in the whole process. On short-term care, much different. So they know the way that they look at this is they already know what they're on the hook for as far as a carrier, what they're going to have to pay. They know that they pay a year of nursing facility, a year of home care, and that may have a restoration benefit on it that someone may use. So it can be underwritten much differently. There is only a yes/no application and a prescription drug check that's done at the time the application is submitted. So very simple and easy. Those are typically the two only things that they're going to do. No cognitive testing, no phone interview, none of that. It's very simple and clean. So let's talk about that. Placement rate, long-term care, short-term care. So as you can see on long-term care, to the left there, all ages, the placement rate is about 57.8%, which little over half are going to get accepted, and the others are not going to be accepted. So as you can see, 60 to 64, 54.7% going to get placed, 65 to 69, 43%, age 70 to 74, about 34.5%, and then 75 to 79 is going to be 25.7%. It's disappointing, but understandable that as we get older, we're going to have health conditions. It's going to get harder to take care of the masses as we gray. So a great alternative to that is short-term care. It has an 84% placement rate across the board. And short-term care will typically start at age 50 and go up to age 89. And it's amazing what you can do with the people that are 75, 79, even people into their 80s, just because of the underwriting difference and taking care of them the best way that you can. So I think that's a stark reveal right there. So speed of decision. Now, this is really interesting. So an application, and I'm going to say electronically submitted because most of them are now. Once you submit that long-term care application, that's when the underwriting is going to start. right? So all of those things, that laundry list of underwriting procedures, that goes into action. And on the low end, a decision will usually come in the first 30 days. In the high end, about 45 days. A lot can happen in that time frame. Some people think about it too long. They decide they don't want the coverage. It's just a long, torturous 30 to 45 days. With short-term care, submitting with an e-app, you can have your decision within 2 minutes of submitting the application, because what's going to happen is with AI automatically, what's going to happen is you're going to have that application read. If everything was answered no, the prescription drug check is going on in the background as soon as you hit the enter button. And you can see a toolbar that will go through the bottom of the screen that will give you the result within 2 minutes. And as I said before, you have an 84% chance that that's going to get issued, which is amazing to me, coming from the long-term care background that I have. So, speed to issue and delivery. Here's another one. So, average number of days to issue the plan and to deliver the plan. Long-term care, right, averages out right at 40 days. Short-term care, 4 days. Again, very quick turnaround on short-term care, which is very good, because you always want someone to know, hey, you've been accepted. You're going to get your plan in a few days. You have any questions, you let me know. Now, elimination periods. This one has always been a real important piece to me on elimination periods. Did you know 92% of long-term care plans that are out there right now have, and this is an average, that's why it says 84. Typically, it's going to be 90 to 100-day elimination period. That's what most long-term care plans are going to have, right? And, you know, if you're age 50, 60, typically you're going to talk about being self-insured for those days. You know, it's really the long stay you can't afford, where you would drain your savings and spend down your money, go on Medicaid. But 100 days, you could afford it if you had to. And they say, yes, could afford it if I had to. But did you know when they get onto Medicare, because all of these people are going to eventually age into Medicare, it does make a difference. And I'm going to show you right here. So I'm going to tell you about the problems with elimination periods. This is something I've always focused on, and you can focus on it even more when you have a short-term care plan available. So Medicare covers day 1 through day 20. If you're not familiar with Medicare out there, if you stay in a hospital for 3 consecutive nights as an inpatient, Medicare will cover rehabilitation and therapy in a skilled nursing facility days 1 through 20. A traditional Medicare supplement will cover day 21 through 100 of skilled care only. So that gives a total of 100 days. So what's the big deal about giving an elimination period of 100 days? It looks like they're going to age into that, and they're going to have more coverage than before they were 65. There are so many changes going on right now with Medicare, so many deficits out there. Things are changing in the background almost daily, because we have these 10,000 people turning 65 going on Medicare every day, and that's going to continue until 2030. So we have a lot more spending to go for the government. But here's what it is. When you hear these words, or this word, observation, it changes everything for your Medicare patients. And like I said, I know that if they're not on Medicare, they don't have to worry about this yet. But I think this is a great thing to tell your clients that are 60. In the next 5 years, here's one of the issues. We can take care of that today by fixing this now. So what is observation? I'm going to show you here. Observation status happens in a hospital. Right now, hospitals are being scrutinized because they're admitting too many patients that are on Medicare. And if they admit too many patients, Medicare doesn't like that. They say, you know what, you really shouldn't be admitting that many. Not everyone has to spend the night in a hospital. So they have created these rules and regulations for hospitals that have really forced hospitals to do a little maneuvering. They get penalized now if they admit someone they shouldn't have admitted. If they have too many readmissions into the hospital gets penalized with Medicare money. And we will go over this at another webinar, but the long story short is this: hospitals are using observation status to avoid these penalties that Medicare is putting on them. So for instance, if someone's coming into a hospital, don't admit them as an inpatient, put them in observation. They're not really an inpatient. They're coming back in for being readmitted within 30 days. Don't put them in the hospital as an inpatient, place them in observation. Well, we all know once you're on Medicare, you must be in a hospital for 3 midnights as an inpatient to get your days 1 through 20 of skilled care, and then the supplement day 21 through 100. So if you're in observation, you're not actually that inpatient. Those 3 days do not count towards your skilled nursing stay. So guess what? Medicare doesn't pay for that rehabilitation and therapy. I'm going to show you a quick video. It may cut out a little bit here and there, depending on your bandwidth, but I want you to see this, please. It's just a minute and a half long.
Good. 79-year-old MJ Bricu is doing physical therapy after a bad spill in September. She spent 3 days in a hospital. She got the same care as an inpatient, but she wasn't classified as one. Instead, her chart said she was only under observation.
I mean, it's illogical. I had a broken leg. It just didn't make sense at all. What were they going to observe?
And here's what she didn't understand at first. That label, under observation, technically made her an outpatient. And that means Medicare won't pay for her rehabilitation in a nursing facility, which costs $28,000.
The whole thing is so outrageous, and it's not right.
It's a huge problem. There are over 1 million, almost 2 million people every year who are stuck in this observation status, Alice in Wonderland world.
To the patient, to our viewers, frankly, it seems like the hospital shares at least part of the blame for this.
Sure, they're in the hospital. They're going to think all of this is a hospital decision. Much of this is out of our hands.
Rich Umdenstock, who represents most of the hospitals in this country, says they're being squeezed by Medicare. Inpatients cost more, so Medicare aggressively audits the classifications given to patients.
If you make the wrong decision, if you admit a patient to inpatient status, and then they determine after the fact, sometimes years later, with additional information the physician didn't have, they will take that payment back. Unfortunately, the patient does get in the middle of this.
We wanted to talk to Medicare, but they denied our request for an interview, citing pending litigation on this very issue. The hospital that treated Mary Jane wouldn't talk to us either, but gave us a statement saying it is obligated to follow Medicare rules when assigning patients to their appropriate level of care. MJ finds the whole thing unfair. She and her husband, who's had Parkinson's for 20 years, just moved in with their son in Dallas to save money.
I've worked my whole life, and I'm just appalled.
Now, any money they can save will go to her rehab.
So thank you for watching that. I know it may have been a little bit difficult at points to hear. So that's what observation can do to a Medicare recipient, which I think is important for all of us to know. I like getting that out there. Now, can long-term care fix this? Yes, long-term care that covers from day one can take care of this. But as we know, that's really hard to do with long-term care. The price point, who's offering a traditional plan, maybe a hybrid plan, but short-term care, 99% of the plans that are issued are first day coverage that take care of observation stay. If Medicare doesn't pay, it's going to pay. And with it being an indemnity, for sure, it's short-term care is an indemnity, it's going to pay its full amount regardless of how much that bill is, or even if Medicare paid. So for instance, let's say that Medicare does pay, they pay the 20 days of skilled care. Short-term care will also pay the same 20 days directly to the insured, to your clients. That money is theirs to spend as they wish. It is non-taxable. It's an insurance benefit. So I like bringing this up. Your clients may not be at this age. I'm sure some of them are. I'm sure you have probably half and half out there, but it's important to let them know there is a gap out there, and short-term care could be the answer. So in conclusion, I hope we have some good questions out there, but when long-term care is unavailable, I want to stress that only when it's unavailable because of a person's age, their health, or their finances, it's important to consider a short-term care plan. I promise you, your clients are going to thank you. They're going to think you're the smartest in the world for finding an alternative to not being able to get long-term care. And that is going to protect them, their finances, and their well-being, because they have a plan of action to where if it's recovery that they're going to recuperate from, whether it be a month, 6 months, a year, 2 years, that they have something in place. I truly believe something is better than nothing. And please just look at these plans. I can help any of you that want more information. NAIFA has been amazing, welcoming us into the fold to accompany long-term care. And just remember, even if someone can afford long-term care past the underwriting, maybe a short-term care plan can just fill the 90 days, the elimination period. See, there's a lot of ways they can work together and fit together. So just consider that. I really appreciate you all listening today. And thank you. My information is right there. If you need to jot it down or take a picture, that would be wonderful. And also, I'm going to put up here my reference, because you might say, is he sure about those numbers? We are sure about those numbers. So thank you all for that.
All right, thanks so much, Jamie. We actually do have quite a few questions, so I can just start at the beginning. This would be the earliest question that was asked. So earlier in the presentation, is this an indemnity benefit?
It is an indemnity benefit. So it is going to pay regardless of how much was charged by the nursing home or the assisted living facility or home care. And as I said, if a nursing home is charging $240 a day, but they have a $300 plan or a $400 a day plan, that money is going to be paid directly to the insured if they wish, or they can assign it to the nursing facility. I always say have it go straight to the insured. That way, any excess money they get to keep. That is their money to keep. They can bank that and pay for future care over 360 days. Great question.
All right, next question is underwriting different between LTC and short-term care?
It is. I could tell these were at the beginning, since I did answer that. So yes, you saw for that those laundry list of qualifying procedures that long-term care goes through. That does bring up something too. There's a lot of third-party administrators that they're the ones that go out for long-term care, and their job is, hey, can this person really not perform 2 of the 6 ADLs, or are they really cognitively impaired? This is when someone's going to make a claim. Do you know short-term care? I don't know of any carrier that has a third-party administrator. So it really is where they go off of the insured's medical records from their personal doctor. There is no one else in the mix that's going to come in and say, it's their opinion that even though the doctor said they can't perform these ADLs, we see it different. That doesn't happen with short-term care. They go off exactly what their personal physician says.
Awesome. Next question is, what carriers offer short-term care?
Oh, you have, well, I will tell you, Aetna for one. You also have Guaranteed Trust Life, and you have Medico. Those are really the top three. I have heard rumblings that there may be one or two carriers that are wanting to get into short-term care because of exactly what it can bring to the table as far as being an alternative. I can tell you there's been lots of movement on these plans over the last 5 years. They keep growing and growing and growing. And a lot of it is because long-term care agents, financial planners, wealth managers, they have found that short-term care can be very beneficial to their clients in protecting something. And if you look at any statistic, you're going to find statistics, they're all close, but they say that what's the average someone's going to need care? How long is that going to be? And it goes anywhere from 1 to 2 years to 2.5 years. You'll find them at different amounts. So I feel short-term care is really hitting that sweet spot. Now, yes, there's going to be people in the nursing facility 5 years. My wife's grandmother was in there 24 years. So yes, I understand that there are much longer, but that's not the norm or the average.
Awesome, thank you. We have a lot of questions about what the typical cost is for short-term care. So there's quite a few of those in the chat if you wanted to just broadly answer, and we can. Yeah.
Well, it's different from company to company, but I'd love to give you all this little secret. If you download an app on Android or Apple product, go to the App Store of either one and download. It's just called Quotes on the Go. I should have put a slide in here for that. Quotes on the Go. Now, this is only going to give you Aetna's pricing. Other pricing I do not have, but I can give you examples. For example, let's do this. Let's play around with a 65-year-old. I know this one by heart. A 65-year-old, just from the Washington CARES Act, I did a pricing. I said, what would a short-term care plan do in that situation, and what would it cost? And all I have is what I can tell you with the Aetna product. But a 65-year-old. Now, this isn't a 50-year-old, a 65-year-old, a 1-year plan, 360 days, $100 a day, $3,000 a month, $36,000 a year is about $42 a month. And it's important to note this, that Aetna has had short-term care plans available since 1996, and they've never had a rate action. So we're very proud of that. And I can't speak for the others, but I don't think the others have had rate actions. I just know that Aetna's had one of the longest running short-term care plans out there.
All right, thanks. Next one is, if someone has already been declined for long-term care, would it impact their eligibility for short-term care coverage?
Oh gosh, great question. Yes. I know an individual that had all of his Genworth, back in the day, Genworth long-term care declines. And I think he got 90% of them on short-term care. And short-term care is also guaranteed renewable for life. So no worry that they're going to pull it out from underneath them.
Great. Another question is it true that Medicare plus supplemental actually covers 80 days in practice?
So Medicare will cover 20 days of skilled care if the patient is in the hospital for those 3 midnights, but they have to be labeled an inpatient for 3 consecutive midnights. And then they will pay for 20 days of skilled care. They will not pay for intermediate or custodial. Then I think what they might be thinking of, Medicare says that they pay for 80 days, that they're paying in between what a Medicare supplement will pay, day 21 through 100, which they may be paying a little bit. But a Medicare supplement will pay from day 21 through 100. But again, only of skilled care, not intermediate or custodial, and no assisted living. And if you're curious to what Medicare pays for home health care, typically Medicare is going to pay for intermittent care, not intermediate care, but intermittent, which would be about an hour every other day, sometimes daily, but not often. So it's usually 2 or 3 times a week, and that lasts for 2 to 3 weeks. So not a lot of care you're going to get from Medicare, especially to stay home.
Thank you. Next question is, do you find that if a senior is on original Medicare versus Medicare Advantage, they don't run into the observation issue?
Yes, that's another great question. Glad you brought it up. So right now, Medicare Advantage folks out there do not have to worry if they're placed in observation, at least not for getting their skilled care. Currently, 99% of the Medicare Advantage carriers out there are not penalizing the patient if they're in the hospital under observation. They don't have to be an inpatient. They don't even have to be in 3 days. Typically with Medicare Advantage, you're going to get your 20 days of skilled care. Where the expense comes in for a Medicare Advantage person is day 21, there's a rather large copay, day 21 through 100. So that's where their expenses come in. Great question. These are all good.
Yeah. Kind of leading off the observation topic, can the observation status be challenged while in the hospital?
You can challenge it. So as I said, we could do a whole webinar on this. I love getting into this stuff, but it's basically this. The only reason an individual would be put in observation is if the hospital knows Medicare's not going to pay for the hospital stay at all if they admit them as an inpatient. They have hospital recovery auditors that get to come into the hospital. They go through all the records of the hospital, and what they're looking for is where the hospital admitted a patient that they shouldn't have. And those auditors will take that, they will send it to Medicare and say, look, they didn't follow the procedure. If Medicare agrees with the auditor, they will take away all of the money that they were paid for that one patient stay, all of it, 100%. And the patient doesn't have to pay it. The hospital does. So when you go to challenge them putting your mother, father, or friend in observation, you have to remember it's going to be a tough battle because they know if they overturn that, they're not going to get paid. And now what they're doing within the first 24 hours of being in observation, the hospital will come to that patient with a form that says you are an outpatient, not an inpatient in our hospital, and here's why. And it lists everything that you may be responsible for since you were not admitted as an inpatient. They will witness you signing it. Now you can say, I don't want to sign it, but the procedure is this, and you can check this. If someone says, I'm not going to sign that piece of paper, the hospital employee will go get another hospital employee, and then they will come back in and read it to you. And then there's a witness that you know what's going on, but you refuse to sign. So it's very difficult to challenge. You can try it, but it's very difficult.
All right, thanks. We have a lot of questions about if this is if short-term care is available in all states, and if it isn't, which ones are the exceptions?
Yeah, so typically what you're going to find is all the carriers will be in about 34 states. You're going to find California, Washington State, New York State, Florida. There's a few more in there that do not allow short-term care. But I will say this, there's ongoing effort right now to get into the states that there's no short-term care available. Talking with the DOIs and making headway. I can tell you Aetna has gained 3 more states just in the past few months, which is a big win. And they're going to continue to do that. And I'm sure the other carriers are doing the same thing. It's typical to see one carrier get in, you go, oh boy, they must have opened the door for us. And then they'll file for that state. So you're looking at about 34 states.
All right, thanks. Next question. We've got a lot of questions, so I apologize if we don't get to them all. We do still have about 20 minutes left in the webinar, but if we don't get to all of them, we will find a way to answer these questions and send out our
I'll
answers.
try to go faster. It's my fault. I'll go faster. Go
No,
ahead.
you're providing very thorough answers, and I'm sure everyone's very appreciative. Next question is Aetna considering being able to use the facility only portion of the policy for in-home?
The facility only for in-home? I don't know if I understand the question. So you can actually, and maybe they mean this, you can minimize the daily amount and the time on the nursing home assisted living part and give someone just the home care. Like the rider on there, you could give them a 52-week benefit on that. I don't know if I understand the question. I apologize if I don't.
Yeah, and I apologize. I don't have a better grasp on it to be able to clarify. So what is the elimination period for short-term care?
What you're going to find for short-term care is a 0-day elimination. They call it a waiting period, not elimination, but it's the same thing. 0 wait, 20-day elimination, or a 90-day elimination. So there's the 3. And when you see the pricing, you will understand why first day coverage really is better for your client all the way around.
All right, great. We do have a few questions about what is the minimum age and a maximum age? Is there an issue with minimum and maximum age? Just people want to know.
Some carriers do not go as high, but at Aetna, it's age 50 to 89. And there will be future plans coming out that will go down to age 40, I believe, and up to 89.
Great.
But currently 50 to 89.
Thanks. Also, a few people have asked, do you have to be licensed to sell Medicare or short-term care? What kind of licensing is needed?
Just a health license.
All right. Easy peasy.
That's it.
Next one is there any reason why Mary wants to know, is there any reason why I wouldn't sell a short-term plan with a long-term care coverage with the 365 elimination period?
Oh, you hit it, Mary. That's what a lot of representatives are doing right now, just to see if the cost, if it's gonna be whatever is better for the consumer, right? Just like what we want, the consumers want. It's our job to take care of the consumers. And when you can have a product that's so versatile, yes, you're spot on. And now remember, 5 days more, 365 days would be the long-term care. It'd be 360. So they would self-insure themselves for those 5 days. But other than that, you're exactly right. It's a perfect pairing. They can live in the same place, short-term and long-term. That's smart.
Another person wants to know, to file a claim, is a doctor or licensed person able to say you need care for over 90 days?
No, there is no requirement for that. And again, that's the beauty of short-term care. You may only need care for a week, 2 weeks. That's really hard on people. I'm going long, but that's really hard on families. They're not going to be in bed for 90 days. So no, you do not have a requirement of 90 days.
Great. A few people have specifically asked about California and is short-term care available in California? And if not, are there any actions in place to get it?
There are actions in place. We have top people at our home office that are working on that as we speak.
Awesome. Thanks. Okay. What is the comp to the advisor on short-term care?
Yeah, well, that's going to be something that's different. It's going to be different everywhere. And I urge you, typically you would have to get with your upline, so to speak, and ask them what the commission tables are. That's really not my area of expertise. I can tell you everything about Medicare and the plans, but the commissions are a different story.
Great. Someone wants to know, can you talk more about combining this with long-term care coverage? Just a little more thorough or brief explanation.
I think Mary had it exactly right. The more of a delay, if a long-term care carrier feels that, hey, we got a good chance to it's a whole year for them to recuperate. In some instances, that long-term care plan is going to be less expensive if it has a 1-year elimination period. So fill that with a short-term care plan. Maybe you want to do 6 months. So that is a good question, because you can buy a short-term care plan. You can buy a 90-day plan, a 180-day plan, a 270-day plan, or a 360-day plan. So like I said, very versatile, flexible in what you can design policy-wise, elimination period-wise. But most definitely, please give first day coverage for your clients. You're gonna save the day, or they're going to get extra cash that they can use. I don't want to make it sound cheap, but extra benefit that they can use to maybe pay prescription drugs or other necessities after a hospital stay or recuperation.
Yeah. Someone wants to know, is there an underwriting guide to short-term care that they can use?
There is. When you go to Aetna seniorproducts.com, I can only speak specifically for Aetna, but if you're not appointed with Aetna Senior Supplemental, you won't be able to log on to the website. But there is, once you become an agent, you will have full access to the underwriting guidelines. And it really is this. The health questions are nothing like long-term care. I can assure you they're the normal everyday things that seniors would have. They understand that. If you're in the short-term care business, you understand who you're dealing with. You're dealing with older adults, 50 and above, that are going to have certain health problems. And that's okay. That's actually normal to have these health problems. But if they're under control, you have a very good chance of getting a plan.
Someone wants to just know if HSA funds can be used to pay the premiums on short-term care.
That changes from year to year. I get asked that, and I always I say, you have to ask your tax professional, because I'm not a tax professional, and it may be different. I think every year that changes. So please ask your tax professional. Sorry.
Great. I know we kind of touched on this, but someone wants to know the cost difference between LTC and STC. If there's a brief example you can give, perhaps.
Well, I really can't. I'm not offering long-term care anymore, just because I've become a specialist in a certain area with senior supplementals. So I can't really say what a long-term care plan's costing, but they've always been expensive. Short-term care, it's all going to depend on the benefit, of course, but you can get a very good plan. As I said before, a 65-year-old paying $42, $43 a month for $100 a day. And you can multiply that by 2. If you go $200 a day, multiply that by 2. It's going to be about $84 a month. Or if it's $300 a day, multiply by 3, 400, multiply it by 4. That'll give you what your pricing would be. And let me give you an example. We just upgraded our plans to cover $400 per day. They were $300. So I personally have a $300 a day plan and a $100 a day plan. I have two plans, and I have a year of home health care. My premium is a little over, I think it's about $115 a month. And I am 58 years old. So if that gives you any idea on what the cost would be, it's phenomenal, the amount of insurance and the reasonable pricing that they have for people on a fixed income. Whether some people are more fixed than others, but whether you have much wealth or not, the premium is the premium, and it's good for everyone.
Awesome. I know you also kind of mentioned some of the other carriers that are in the market for short-term care in addition to Aetna, but they also want to know, will you please explain again how 2 years can become 4 years of coverage?
Sure. Another great question. So, and again, I can only speak for the Aetna plan. When you have a 360-day nursing home assisted living, any nursing home, any assisted living, and these plans are portable, where you can go. Maybe you live in Tennessee, you take out the policy and you move to California. Even though California doesn't have our plan, you can still go there and get paid on that plan. So let's see, I lost my train of thought there. Tell me the question one more time.
Sorry,
Please.
yeah, find it.
No, it's me. I'm going off on the tangent.
They wanted to know how coverage can go from 2 years to 4 years.
Okay, exactly. So basically this, you have a year of nursing home, 360 days of nursing home assisted living. And if you add the home care rider, it's a separate 52 weeks of home care. So those two combined, you can use consecutively. That would be 2 years. There is also a restoration of benefits built into the plan. So at any time, if you use the benefit and you come out of the nursing facility, you do not need care for 180 days, 6 months, and then you qualify again, you need care again with the 2 ADLs or cognitive impairment, you get that benefit again. You can use it a second time for a full 360 days at $400 a day, whatever it was that you chose. So potentially you could use that plan twice, 2 years for nursing home assisted living, a separate 2 years for home care.
Great. Roger wants to know, he says, I write Medicare supplements through Aetna. Is this available under that contract?
Oh yeah, you're all ready to go.
There you go, Roger.
You're ready to go.
Are there life insurance companies that offer short-term care riders on policies?
No, there isn't. Isn't that shocking? Somebody needs to maybe develop that.
Yeah. Someone just wanted some clarification, yes or no. Sorry, they used abbreviations and I'm not sure exactly what they meant. Yes or no app and reinstatement of benefits. But
I don't know.
yeah, we can.
I'm
move
afraid.
on. Sorry, there's a lot of questions, so I'm trying to remember which ones we've kind of covered
Okay.
already.
You're doing awesome.
Yeah. Are premiums banded?
So they are banded. There is no male female pricing. It's same price. They're age banded. So 65. You're going to get each age group is going to have its own premium. So the age is banded, but not male female. Doesn't matter male female. And also on may not believe this, there is no question on the Aetna products on if you're a smoker or not. Doesn't matter. It's the same rate for everyone.
Great.
There is no preferred rate. There is no preferred rate or high risk rate. There's only one rate.
Great. Mary wants to know, there are several companies that offer short-term care as an agent. What differences are there between plans, if any?
Oh, you'll find some of them may just pay like the up to whatever the nursing home is charging. They may have, some carriers do this where you may have $300 a day. The nursing home's only charging $200. So that's all that they're going to give you is $200. You don't get the three and it doesn't carry over anything like that. But you'll see little differences. What you want to look for is it's just longevity in the product. You want to look for pricing, like anything. Have they had rate increases in the past? How's it performing? You will see that some do not offer full day one coverage, or they may not offer the full 360 days, or even offer home care. Maybe home care isn't 52 weeks. It might only be 3 months. Some only offer medically necessary home care, like maybe it would only pay if someone needed to have physical therapy, speech therapy, respiratory therapy. Some do not pay for what do most people need out there when in need? They need like visiting angels, care tenders. These are the non-medical home healthcare agencies out there that's very hard to get paid for. I can tell you that Aetna pays for any licensed home healthcare agency. It doesn't matter if it's visiting angels or not, or if it's physical therapy, they'll pay for that. You just have to look at the brochures and the outline of coverage and the policy to make sure that it's going to cover all those things.
All right, thanks. We just have a few more minutes, so just time for a few more questions. And if we don't get to your question, I promise you we will find a way to get you the answers that you're seeking. This has been a very interesting topic, and it seems to have sparked a lot of conversation. So someone asked, is this expected to be eligible for an exemption in long-term care trust states as they come up?
It's not on the radar right now, and I would love to see it be considered in that. But the answer is no, not right now. But I'm pushing for that. I think it could be a big problem solver for what's going on right now. But there's a lot of smart people within NAIFA that know much more than I do about what's going on from state to state. And I'm slowly learning. I'm new to NAIFA, but I'm like a sponge. I'm learning from some of the great people in there. So they're maybe coming in the future.
Kind of a situational question. Would you recommend someone leave the hospital if they are under observation? Is the stay covered by Medicare? Is the only issue that you don't qualify for skilled nursing coverage?
Well, there's a couple of things. No, do not leave the hospital, please. That would not be good. The patient's not going to have to pay for that hospital stay. That the patient's not going to have to pay for it. What the patient will be responsible for is any over the counter drugs or prescriptions that they're already on from home. It's calculated different. Typically, they're having to pay for half of their medication when they're in observation. That's another kind of pitfall right there. And that can get to be a rather large bill. But other than that, really just the drugs and your care after the hospital are what's affected. Do not leave that hospital, please.
Someone wants to know if the rates change as you get older each year.
Well, I can tell you they haven't changed yet as far as Aetna is concerned, and they are performing very well. There's nothing that we can see in the near future to warrant that. So I know everyone, if you've been in the long-term care business as long as I was, you never say, hey, the premiums would never go up. But I will tell you this, it's very well managed and it's a different animal. The actuaries can actually figure out what their losses are going to be and what their gains are going to be. And it's a very successful plan with the underwriting and it's like I said, it's just performing very well. And I think that that's why you have other carriers wanting to get into the market, because they see that is a good place to be. It's good for their clients, and it's good for the company, good for everyone.
All right, we are just about out of time, everyone. I apologize. We did not get to all the questions. So if you do have a lingering question, I highly, highly encourage you to contact Jamie. His contact info is on the screen, his phone number and email address. So I saw a lot of people wanting really specific answers, so he would be the best person to talk to. So, give him a call, shoot him an email. I'm sure he doesn't mind. And a recording of this presentation will be sent out to everyone in the coming days, as well as the presentation slides. And we'll do our best to find a way to answer some of these lingering questions. But yeah, I'm happy to see that there was such a lively conversation about the topic. And thank you so much, Jamie, for your time. And that concludes today's webinar.
Thanks, everyone. Thank you. Have a great day.